In this video, I'm going to share my thoughts on DBS shares and whether they're still a good buy. Let's get into it. Hey friends, welcome back to the channel. I'm Iggy here, and I've been covering topics such as stocks, finance, CPF, and basically everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've also covered over 500 videos and over 250,000 watch hours as of September 2024. Today, we're diving into a hot topic in the Singapore stock market, DBS shares. I have also received some feedback that you prefer either my original voice, so here's me back with my original voice. Do leave a comment and let me know if this works for you. So, DBS shares recently hit a record high of $39.70 before taking a bit of a dip. Now, you might be wondering, Iggy, is it still worth buying DBS shares? Well, let's break it down. First, let's talk about performance. DBS has been on fire this year, gaining about 30% year-to-date. That's pretty impressive, especially when you compare it to the overall Straits Times Index. It's like DBS is the star student in a class of average performers. Now, here's something that might catch your eye: dividends. DBS is offering an annual dividend yield of 5.5%. That's like getting a nice bonus just for holding onto the stock. In a world where interest rates might be heading down, this kind of dividend yield could be a real lifesaver for your portfolio. But what do the experts think? Well, it's a bit of a mixed bag. OCBC Investment Research is playing it safe with a hold call. They think DBS is worth about $39.83 per share. Not bad, but not exactly screaming buy either. Morningstar, on the other hand, is a bit more optimistic. They see DBS as moderately undervalued and think it could be worth $44 per share. That's like finding a designer bag on sale, potentially a good deal if you're in the market. RHB Bank Singapore is sitting right in the middle. They reckon DBS is fairly valued at $40. It's like saying the price tag on that new gadget you want is just about right, not a steal, but not overpriced either. But hold on, not everyone's jumping on the DBS bandwagon. Citi Research is waving a red flag with a sell call. They think DBS is only worth $31.90 per share. That's quite a difference from the current price, isn't it? So, what's the deal with all these different opinions? Well, it comes down to how these analysts see the future unfolding for DBS. Let's talk about what DBS has up its sleeve. They're aiming to double their wealth management fees from $500 billion in assets under management by 2027. That's like saying they want to turn their piggy bank into a treasure chest. If they pull this off, it could mean some serious growth for the bank. But here's the catch: interest rates. The Fed might cut rates in the future, which could put some pressure on DBS's profits. It's like turning down the tap on their money flow. But don't panic just yet. DBS might be able to make up for this by improving their loans and fee income. It's like finding new streams to fill up that money pool. Now, let's talk about leadership. DBS is getting a new captain. Tan Su Shan is set to take over as CEO in March 2025, replacing Piyush Gupta. It's like a changing of the guard, but most people see it as a smooth transition. Tan Su Shan is seen as a continuity candidate, which means the ship is likely to stay on a similar course. So, what's the bottom line? Should you buy DBS shares? Well, it's not a simple yes or no answer. DBS has some strong points going for it. That juicy dividend yield is hard to ignore, especially if you're looking for some steady income from your investments. And their plans for growing their wealth management business could lead to some nice profits down the road. But there are also some challenges on the horizon. Those potential interest rate cuts could put a dent in their earnings. And with the share price already having had a good run this year, you might be wondering if there's much room left for growth. Here's how I see it: DBS could be a solid option if you're looking for a defensive stock in these uncertain times. It's like having a sturdy umbrella in your portfolio. It might not be the most exciting thing, but it could provide some nice shelter when the market gets stormy. But remember, investing is not one size fits all. Your decision should depend on your personal financial goals, risk tolerance, and overall investment strategy. It's like choosing an outfit. What looks good on someone else might not be the best fit for you. If you're thinking about buying DBS shares, here's what I'd suggest: do your homework. Look beyond just the share price and dig into DBS's financial reports. It's like test driving a car before you buy it. You want to know what's under the hood. Keep an eye on interest rate trends. They could have a big impact on DBS's future earnings. Consider your investment timeline. Are you in it for the long haul, or are you looking for quick gains? DBS might be better suited for patient investors who can ride out any short-term volatility. Don't put all your eggs in one basket. Even if you're bullish on DBS, it's always smart to diversify your portfolio. It's like having a balanced diet for your investments. And finally, if you're unsure, don't be afraid to seek advice from a financial professional. They can help you figure out if DBS fits into your overall investment strategy. Remember, the stock market can be unpredictable. What looks like a great buy today might not be tomorrow. That's why it's crucial to stay informed and make decisions based on your personal financial situation and goals. If you guys enjoyed this video, then you're going to love my video on top 3 SGX blue chips with dividends and growth. In that video, I break down some of the best dividend-paying stocks on the SGX. It's perfect if you're looking to build a solid income portfolio. You can find the link to that video in the description below.